there, Dale.
Hey, good morning. How are you?
I am doing well. It has been a hot minute since we did a market update, but hope you're doing well yourself.
Yep, woke up this morning. That's always a good day.
Breath in the lungs. And using that breath, Dale, tell us where we are at on interest rates.
So right now we're sitting at about 6.19 on the 30, 5.44 on the 15th. Relatively similar. Remember, this was December 4th. We're almost always a week behind on our trends. And this is, of course, 20% down, all credit scores, all points, all that is factored in. So rates, may or may not have that rate, but that's the average. But we see a big change possibly coming up tomorrow.
Tomorrow is going to change things. We'll talk about the federal meeting tomorrow in just a second, but let's take a look at mortgage-backed securities. We did have a little bit of a rise in the 2 weeks prior, but now we're having a bit of a tizzy down. And remember, green and up is good, red and down is bad. It's inverse of what mortgage interest rates will do. And right now, this little downward trend, which is not what we want to see, is basically a correction of over hedging in the marketplace. We'll talk about that in a minute, but the Federal Reserve is meeting tomorrow for their interest rate cut meeting that everyone's so excited about. And there were some news items delayed by the government shutdown, like inflation reports and jobs reports, but we started to get some data, and it's pretty much cemented the Federal Reserve's rate cut. So we're probably going to see that. Now, if you've watched our market updates, you know that this is the sixth Federal Reserve rate cut of 0.25% in the last 2 years. And the previous 5 rate cuts, Dale, what has happened?
So every rate cut, including more than likely this one, it has actually caused rates to go up.
Mm-hmm.
What? Well,
shock.
Hedging your bets. We've talked about this every time. You've got the market. Market thinks it's going to get this much better, but it only gets this much better. And so what you have going on is the market is overcorrected. They've actually loosened up and lowered rates too much. So when the Fed doesn't reduce rates as much as they would like, then rates go back up so that they meet each other. So virtually every time the market after the Fed rate cut has gone up because they hedged their bets too much, hence the term hedging your bets.
Yep. And we can see 2 examples of that right here on the mortgage-backed security chart. We had a Federal Reserve rate cut right here. The market hedged their bets. Things got better. And then they actually did the rate cut, and what a steep drop off. Same thing is happening right now. The market's hedging their bets, and then boom, a drop off. Remember, inverse mortgage rates are actually inverse of this, so they're going up. Yes, the rate cut is likely, but mortgage interest rates will go up. But I do want to shift a little bit and talk about a housing index. This is provided to us by MBS Highway. And what MBS Highway is basically a conglomerate of a bunch of loan officers that gather data and provide us with information. So this is their Housing Index National Survey for December 2025. And as you can see, national buyer activity, according to loan officers, seems to have slowed down. And that's 60% of loan officers reporting that. Same with the home price direction for the nation. About 54% of loan officers are seeing price reductions in their local markets. Dale, what are we seeing in terms of regional breakdowns?
Well, it's really interesting to note because every region is a little bit different. Let's just focus on the West Coast for us. For example, remember on that 50 and above is expansion, below 50 is contraction.
Yep.
Look at the buyer activity on the West Coast from December of 2024, rated 29. Now it's rated 30. So it's very small, but it is going up a little bit. One of the reasons could be, let's look at the price direction. In 24, we were at a 41. Now at 25, we're at 30. So prices are reducing a little bit. that could help spur buyer activity. Everybody, all buyers buy for various reasons, but price reduction isn't necessarily a bad thing because buyer activity could go up,
Right.
and we're pretty consistent. There's a few places like the Northeast and the Mid Atlantic with some bigger swings. You look at the Mid Atlantic and their price direction, 57 to 44. That's a pretty big swing, but
Yeah.
overall, I think we're doing okay.
Yeah. So keep in mind that as interest rates come down, more buyers will enter the market. And if prices do come down on houses, that will be more encouragement. So use this to your advantage as you're talking to your clients and realize that, especially compared to a year ago, we're in a much better situation. So, all right, Dale, that wraps it up for today. I greatly appreciate your time.
Have a great day.
All right, you too. Bye.
Bye now.